I think around about 16-month highs. Let's bring in Markus Helsing of Alpha Broking. He joins us from our Melbourne studio. Markus, look, what have you made in the moves in copper, and does it have further to go?
Well, it is Dr. Copper. It is a forecast for economic health and lack thereof. And I mean, it broke up the last couple of weeks, mainly on Chinese demand, but also on a market that bottomed out over the last 12 months after a 4-year bear market. From 460 cents a pound, it fell down to about 180, stabilized between 200 and 230 cents for the better part of the last 12 months. We're now around the 250. Now, to me, this is, for Australia in particular, this is really good news. And that's basically positive on our terms of trade. If you throw in iron ore, that's not trading in the high 60s, basis spot, and obviously others. But copper, as an indicator of where we're heading on a broader spectrum, is called Dr. Copper for a reason. So we are very keen to see a lot more gains. Our aims are 280 to 300 cents a pound over the next 3 to 6 months. The way it's going in the moment, we're probably looking conservative. Now, what that means is that generally not only our terms increases, our terms of trade have a tremendous positive impact. It obviously affects all these mining stocks that many of them already built part of that in, if you look at the BHPs, but many of them might not have built in as much yet. So basically the copper story is a bullish story, and it's going to be probably with us for the next 3 to 6 months, and should be people should be on board of that pretty much from here onwards.
One of the other it's a bulk commodity that's been in focus because of the movements have been iron ore. I think it's around about $70 a tonne at the moment. Your thoughts on what's driving iron ore and the outlook for it?
Well, look, obviously China has been always the main driver. Now with Trump talking infrastructure projects and all that, I mean, it is quite obvious to anyone who travelled to the US lately that they do have some major need of infrastructure rejuvenation, so to say. I mean, bridges have concrete cancer and the like. I mean, there's massive jobs at hand. There's still a bit of a question of how the whole thing will be financed, but generally the message is positive. And for bulk commodities, while they might not race away currently with the supply side, the way it looks, they might have just basically underlying support to hold well where they are, give and take 10 or 15%. And I think that'd be a great result for Australian miners and for Australia in general.
China at the centre of all this, isn't it, James? I mean, and relatively happy, confident with what you're seeing over there?
Yeah, look, I think that the data we're seeing out of China is looking very positive or encouraging from that stabilisation point of view. And I say stabilisation, they're not out of the woods yet. But we look at data that came out this week. You know, we looked at their PPI, and that came in well above forecasts. And that's the second reading now we've had in a row after 5 years of straight declines. So it is. And we're also seeing reforms in China where they're cleaning up their domestic supply and they're reducing that there. And that's obviously benefiting us here.
You're taking maybe profit, though, in some of the iron ore players?
Yeah, look, I mean, and even the copper players as well. I mean, we've seen Sandfire, Oz Minerals, you know. How do you play this? I mean, it is looking a little bit frothy here for some of these. I mean, and even I think we've got a sell on Fortescue. We've had a sell on Whitehaven. These stocks still continue to go higher. So there's probably still a little bit left in there. But yeah, I would definitely be starting to. I mean, my issue is oversupply, especially for iron ore. There's a lot of supply out there, and how that's going to be held. I mean, Markus, how do you see that playing out with the extra demand, or sorry, the extra supply that's in the market? How do you think that's going to play out on the spot price?
Look, I think you summed it up very nicely. I mean, the forwards still show a $12 backwardation on iron ore 1 year out. I mean, that does tell you the story. I mean, that's basically it. So I think you summed it up spot on. Look, what I just find in the moment, there is a bit of an enthusiasm in the market, and I just feel when you look at the sort of price history over the last 5-8 years, and this sort of recent resurgence in prices, things, as we all know, it always goes further than you think possible with fundamental basis and whatever analysis you look at. So I think, to me, we have a driver here. We had the short covering happening in copper, that's quite obvious, and now we might see some underlying real demand, and that might in itself help bulk commodities such as iron ore to just stay where they are for a while, and I think that's probably as good as it gets for the bulk commodities.
Markus, let's talk energy and how crucial in your mind for the outlook of crude the OPEC meeting this month is going to be.
Well, as I mentioned many times, and as we've seen so many editorials much smarter than me mention it so obviously over the last few months, they have to come to some sort of a solution. They've got to have a price base built in, not just by talking, but by actually coming into action with something. It is a situation that we all know they're snookered. They have massive budget deficits in all the oil-producing nations since they keep on living as if the oil price is still at $100. So they are under pressure, so they're snookered. So it's painful, and they know they've got to do something in order to actually rectify that. So it's a bit more pain for them. And I think they will come to some sort of conclusion that will give a base. Price-wise, natural gas and oil to us still look to basically, they're still a bit at risk of falling back towards levels like $38, $40 in oil. But that could just put them enough under pressure to make the decisions that's needed to get this price into a $40 to $7 range rather than a potential $35 to $50 range where we're currently standing. So we really think in the moment short term there could be a bit more pressure on it, in particular if the US dollar performs strongly. But we are looking for opportunities to get on board in oil stocks and in natural gas. They have seen a decent dump, so we do look for opportunities to get in. We're just holding off at this point in time.
And look, can't let you go without getting a thought on gold. It's been a bit of a whipsaw environment the last couple of sessions for gold. A view on the outlook.
Well, look, gold, the last 24 hours, with this sort of turmoil, gold has seen a huge volume trading day yesterday, and the reaction has shown to everyone out there who had a close eye on it that if there is a bit of trouble out there, most investors who have some serious money to throw at it, they throw it at gold and silver. So we believe it just shows exactly what we're talking about in the big picture, that people should not underestimate the potential for gold and silver and related stocks. And I do believe the fact after all this hoo-ha is still slightly up and well supported in gold and silver prices does tell us we are in a new bull market environment. It's at an early stage, but there's enormous opportunity. I mean, you look at our gold stocks out there. I mean, they've already priced in a lot more than the current pricing. If you look at overseas like Barrick Gold, New Gold, Goldcorp and all them, they're probably a lot more conservatively placed, and I think they offer enormous value. People should look at them. They should look at them now for a long-term hold.
All right, Markus Helsing, fantastic as always to talk. Thank you.
Thank you.